Joining me now live via Skype from Lagos Island to assess new projections ahead of today's MPC meeting, I have with me the Chief Executive Officer of Kairos Capital Limited, Sam Chidoka. Good to have you on the breakfast show today.
Good morning, David, and good to be here. Thanks for having me.
Now, our fingers are crossed at this point in time whether or not the next move of the Monetary Policy Committee will see a retention, tightening, or loosening of the MPR. What's your forecast and other key parameters as well?
Well, from where we are today, it's most likely going to be a retention because you can see clearly that the CBN is battling so many things at the same time. So you have rising inflation, you have rising costs that has given rise to inflation, you have the exchange rates they're trying to manage, and we're currently in a recession. So it's like throwing three balls in the air and you can only catch one at the same time. So for what the CBN has done, if you look at it, when we went into recession, it was a negative over 6%. Then we began to see some recovery in terms of coming back out of recession, and we saw a 3.6% negative, but we're coming back out of it. So what CBN needs to do is to continue in that direction and not to do anything that changes that dramatically. And so I think that is going to be a retention of the rates.
And now with the country also in recession, we also have to look at how well we've also performed in terms of non-performing loans. Well, according to the banks, we've recorded about 6%, which is still quite favorable despite the first wave and then the second wave of the COVID-19. But now, do you think banks can really continue lending with this threshold that we have at this point in time to the real sectors of the economy? We need stimulants, but banks healthy enough? We've had ratings from Fitch and then PwC and Moody's and a whole lot more. It's relatively unstable globally.
Well, globally, you could say that, and you'll be correct about the instability in the banking system, right? But in Nigeria, we've seen a lot of stability within our banking system, and most Nigerian banks are healthy today, and most Nigerian banks are lending. So what CBN would like to see is when you have your NPLs below 5%. So when you are at 6%, you are somewhere around what will be seen as healthy numbers in terms of non-performing loans, right? But banks have to continue to lend. Banks have to continue to lend. That's the business of banking, right? The business of banking is to lend. So that intermediation has to continue. If anything that makes banks to stop lending at this time will not be healthy for the economy, because like you rightly said, you need the real economy, the real side of the economy to continue to stimulate the economy and grow us out of recession. And to do that, many institutions will require capital. And where is the easiest way to get the capital from the banks? And so you remember that the CBN has set up the loan to deposit ratio as a way of stimulating banks to lend. And that has to continue. Also, rates have aggressively reduced in the economy. If you look at the yield curve in terms of the money market products, rates have come down. MPR is at 11.5%. So the prime lending rates for most banks have come down to rates that when customers receive loans at this lower rates than what we had before.
Mr. Chidoka, if I may button here now, you look at central banks across the globe, they are all pushing for zero interest rates. Do you think Nigeria can replicate this as a working model to help stimulate the economy further?
Well, not at this rate, not at this time, I mean. So if you look at what the Central Bank of Nigeria has done, and which you can liken to what other central banks have done, at the monetary market side of the market, if you look at rates across maybe treasury bills and all of that, you will see that we are almost at 0%. But in terms of lending rates coming to 0%, it's almost impossible in Nigeria just because of cost of doing business. Remember that all these lenders have to grapple with the fact that we still don't have electricity. They have to provide their own electricity. They have to provide their own security at their different branches. So the cost of doing business is quite high in Nigeria. How do you go to 0% lending rate? It's almost impossible.
Let's now talk about liquidity injection. How sustainable is this? We've seen over the past few years, the CBN has also intensified its efforts towards liquidity injection just to ensure that we have stability in the forex market. Do you think this is a sustainable model? Because in the long term, it does not paint the best of pictures. And then I'd also like to have your thoughts on whether or not we'll likely see the conversation around Naira devaluation be on the front burner once again.
So in terms of, as a long-term strategy, liquidity injection in the FX market is not sustainable as a long-term strategy. But like I always say, there is no government that leaves their currency actually without some form of management. So what I would like to see is a sort of managed float. So you expect the CBN to always intervene in the market. That's part of the core mandate of the central bank. So the CBN intervening in the market will continue. However, on the long run, it's not sustainable. When it becomes unsustainable, what you will notice is some sort of devaluation of the currency. Personally, I don't like to speak about devaluation, maybe percentage devaluation, or when it's likely to happen, because what that does is that when we analysts make such pronouncements, it just puts further pressure on the Naira. People who are taking a bet on the Naira will continue to even put more pressure on the Naira. So what I'd like to say is that on the long term, it's not a sustainable policy to continue to inject liquidity, because after a while, if you're not, especially when oil prices are not looking so good, you won't just have the money to do it. However, the CBN has given the indication that they are willing to support the Naira at these levels. And I think that that's a healthy position that the CBN has taken. And I agree with them that it's important to sustain the Naira at these levels, because, again, you have to be wary about inflationary measures that could come because of the continued devaluation of currency.
Okay, wrapping up our conversation now, one of the biggest tasks ahead for the government at this point in time is to see a stronger implementation of the 2021 budget. Yes, we've made our mistakes. We were hit by the first wave of the COVID-19, but now we are dealing with the second wave of the COVID-19, and globally as well, any hope of recovery is hinged on vaccine deployment. But this is still an external shock. Nigeria cannot necessarily determine where the pendulum will swing. What's your forecast and your charge to government at this point in time in terms of budgetary implementation and allocations?
So in terms of the budget, I see a deficit that I'm not very clear about how we're going to fund. I know we talked about borrowing, but we have to be mindful about our borrowing, because once we talk about borrowing in the light of debt to GDP, those figures sound good. But when you talk about borrowing in the light of debt to revenue, debt service to revenue, then those figures don't look good, because at a point, we were doing over 90% debt service to revenue, and that's not good for any economy, right? So in terms of the GDP, I don't see how we're going to fund the deficit. We've talked about selling some government assets, but it's easier said than done, actually, in being able to commercialize those assets, especially when you have not started it over a long time. It takes time, and you need a lot of political will to get it done. And so I see a situation where we're going to have a budget that will probably mirror what we had last year. So on the revenue, on the recurrent side, we're going to have almost 100% performance. But on the capital side, you're going to see the capital side suffer. What do I think is a solution going forward? I think that government has to be strict with non-salary recurrent expenditure and work towards reducing that across board. And whatever savings you get from that, you move it to the capital side of the budget, and ensure that you do your best to implement the much needed infrastructure to stimulate growth.
Thank you very much for your time, sir. For speaking with us, Sam Chidoka, the Chief Executive Officer of Kairos Capital Limited. We'll definitely keep our fingers crossed and bring all of the updates as the MPC meets. But whether or not the move is going to favor the economy, that's the biggest question everyone is watching to hear. Thank you very much once again for your time, Sam Chidoka. It's been a pleasure speaking with you.
Thank you very much. My pleasure too.